Kenya as a jurisdiction is for us a key country of focus. We see exceptional growth coming out of Kenya as a market, and then being able to partner with a local operator who has such a strong local presence in Kenya. So the Orbit group and the Orbit family, obviously controlled by Sachin and his group, is really a key and strategic partnership for us. So from our perspective, what this signifies for Grit is that it signifies really the future strategy of light industrial. And it also signifies the ability to really work with people that across the African continent outside of South Africa to be able to enhance their operating model. So sale and leaseback transactions have been our most successful, and I believe will continue to be our most successful, especially when there's alignment with a strong operational partner. So on behalf of Grit, and as you've mentioned, Morné, the co-founder and the CEO, I think for us, this transaction has been long in the making. Sachin will also attest to the fact that these transactions are never easy. The collaboration with not only Sachin as a partner, but with the IFC, and being able to get the IFC on board, who backs both the Grit story, what we're trying to do from an emerging market perspective, but also the Orbit transactional story about really leveraging and working with local entrepreneurs, having the IFC alongside us. And actually, it's been the first IFC transaction with Grit, is really the foundation of our relationship and strategic relationship going forward with the IFC. And then being able to have very strong partners on the project finance side, both Ethos and Blue Peak, is really this transaction from a relationship partner perspective is really, really exciting. So whilst it's taken us some time to conclude, as I always say, nothing good comes without a lot of hard work. There's no such thing as low-hanging fruit. We've had to work really hard with the Orbit team and our partners, financial partners, on this particular transaction. It's a sizable deal. We're taking a very long-term view on Orbit. Sachin and I are going to be very close friends for the next 25 years of this lease. And I think from that perspective, Morné, this is really just what I wanted to introduce to the press today on behalf of Grit. Thank you.
Thanks. Thank you so much, Bronwyn. Darren, would you like to add anything in terms of strategic direction for Grit post the transaction, or the importance of the transaction? Please unmute yourself, Darren. I'm just trying to unmute the Darren, just bear with me. Adam, can you unmute yourself? Let's just check.
Yeah, I can.
Great, fantastic. Whilst I'm sorting out, Darren, would you mind just taking us through some of the key tenets of the transaction?
Yeah, absolutely. Yeah, I think just to sort of overlay on what Bronwyn was saying, I think very exciting for us to get to a closing on this transaction. I think it has been a lot of hard work from our side and the team that's gone into it. Very much aligned with the investment strategy, as Bronwyn is saying, and definitely a marker for what we want to do in the future, both in light industrial and in Kenya. And the plans that we have for setting up consolidated platforms at a sectoral level going forward as a group. So this is a big step in the right direction towards that. And I think importantly as well to the partners that we've taken on board, important for the press to understand, a marker for the group and its significant focus into ESG going forward. The likes of IFC and Ethos and Blue Peak all being very much, DFI focused and backed. Certainly those ESG initiatives and the commitments that we're making as a group shouldn't be overlooked. It's something that we really are focused on going forward, and one which ties up very well with the Orbit transaction itself and the impact that we can create in coming in and unlocking value. I think just to reiterate one other point, the sale and leaseback nature of the transaction, as Bronwyn alluded to, we certainly see this as a marker for future transactions in Kenya. It's certainly, if not one of the first sale and leasebacks, it's certainly the first of considerable scale in East Africa and in Kenya. So certainly an exciting marker for Kenya in that regard. And it's a willingness to do the work, I guess. I think, and again, Sashin will attest to this. The underlying value that's created for both businesses is something worth working towards, but something that requires a considerable effort to understand each other's businesses, understand each other's pressure points, and at the end of the day, we've got a transaction which is complementary to both sides. And for us, importantly, getting close to the business and understanding that we're putting the Orbit business in a position to grow going forward. And this was always the sort of number one objective for us, is we've got a thriving tenant who's going to excel and thrive going forward.
Fantastic. Thank you very much, Adam. Darren, I think your technical problems have been sorted. Apologies for that. Would you like to conclude on Grit before we hand over to Mr. Chandaria?
Thank you. Thanks, Monet. I think it's just worth highlighting to the press just a little about Grit. I'm not sure how many of you are aware of Grit and what Grit is, but Grit is a London primary listed real estate company focusing on Africa ex South Africa. We're probably one of the only premium segment listed companies on the LSE focusing exclusively on Africa. So what we do is unique from the starting point. We have a secondary listing in Mauritius, but we are proudly African. And I think we operate on the continent, and our vision is to ensure that we are building bridges between developed markets and international capital markets and developing on the continent. And obviously for the benefit of clearly our stakeholders and our shareholders, but also for the communities of Africa. So everything you hear from us will tie into that rhetoric. And I think a lot of the details that the team have already presented represent characteristics of exactly what we stand for as a group. I think the exciting parts about this is that it probably provides a really good blueprint for how we can replicate this a number of times over in the next 5 to 10 years. And obviously our vision as a group is to continue to support the growth of the continent, but also to do good transactions and deliver good shareholder value. So, with that in mind, I think the vision is it doesn't stop here. Kenya is clearly a focus area for us. And I think light industrial and supply chain, we believe across the continent, will help unlock growth, for multi-generations. It's going to be one of those things that will allow job creation. It's going to allow, just in-country growth and development. And I think overall will help lead to better lives for many people and including the communities of Africa. So I think that's where I'll stop. And hopefully, I think we can hand over to Mr. Chandari, who can take you through a bit more of the detail of how this benefits Kenya, as well as the group and as well as the continent.
Thank you, Darren.
Please go ahead, yeah, Mr. Chandari.
Yeah, thanks, Monet. I wanted to say hi to everybody and thank you for making the time. Hi, Bronwyn. Hi, Adam and Darren. It's been a while since I've seen you, but good to catch up. And to the rest of the journalist panel, thank you very much for joining us today. I wanted to start by just first thanking the Grid team for their perseverance. As Roman mentioned, it's been a long 2-year journey to get to this point, and obviously COVID didn't help the ability to accelerate. Just not being able to travel has been a real challenge, but thank you for your perseverance and thank you for getting us to this point and over the line. So I just want to recognize the Grid team. But along with that, I wanted to also recognize everybody else that's been part of this journey. So that is the Opal team, the NCBA bank team, and the IFC team, and there's countless other people that will, for the time being, go unnamed, but are greatly appreciated. So thank you, everybody, for the perseverance. To the transaction itself, I mean, you know, when we first met, for me, this was a little bit out of left field. It took a bit of time to really understand what the transaction meant for the business. But ultimately, it did make sense. And why it made sense was it allows the business to unlock a pool of capital that was previously, you know, inaccessible, but in a very smart, strategic, and cost-effective way. And ultimately allows us to get to a point where our balance sheet is substantially strengthened, positions us for growth. And we have a partner that is coming to the table to even build the expansion that we've been looking for. And the deal structure allows us to really focus on what we're good at, which is manufacturing FMCG products for the home and personal care space. We're not in the business of building buildings and operating buildings. That's not our core business. We run assets and factories, and we do it well. So this deal, like I said, unlocks a huge amount of capital that, you know, was not available. It was locked up in an asset that was not, we couldn't monetize the way we have managed to do it. But at the same time, give ourselves access to the site for the next 25 plus years. So the innovation around the deal structure, the deal itself, I think is really a wonderful solution for a lot of Kenyan businesses going forward. For us as a business, like I said, the deal puts us in a much stronger place. The proceeds will significantly strengthen our balance sheet in a combination of debt reduction as well as working cap reinvestment and a little bit of capital that we will deploy in plant and machinery. But it also allows us to get to a point where we can grow the business, take on new customers, employ a large number of people going forward, and really focus on what we do well. And so I think the upgrades and the expansion are a great part of the strategy. We were bursting at the seams anyway, so the new building that is part of this transaction really gives us the ability to effectively work on our business model with our customers, and get to a point where we're delivering on time in full to the quality requirements for our customers. I think finally, I just wanted to say again, a quick shout out to the Catalyst team, who have been part of our journey for the last few years, and hopefully will stay on for the foreseeable future in some form. So a quick nod to Vishal, who's also on the call. Paul, the CEO, was to join us, but he is unfortunately traveling. So I'm not sure if Vishal has any comments he wants to make. And maybe before I sign off, I could just once again recognize everybody and thank everyone for their hard work and perseverance. Monet, if we could give Vishal 2 minutes to say something, that would be great as well. Thank you.
Good afternoon, everyone, and thank you, Sachin, and thank you, everyone. I want to say a lot. I guess all I can say is that we've persevered over the last 2.5 years, and it's great to see that this is now finally coming to an end. But more importantly, it's going to allow the business to unlock a lot of value, to position it for the growth. As Sachin said, growth in terms of new customers, but also supporting our customers, increasing their presence in the region. And this is essentially going to be part of Opal's strategic vision of trying to become the industrial hub for Kenya, but also for East Africa. So not much more to add, but thank you everyone for staying with us all the way to the end.
Thank you very much, Vishal. Ladies and gentlemen, I would like to open the floor up now for any questions. If you wouldn't mind raising your hand, then I can unmute you, or alternatively, if you would like to type your question, in the chat function, and I can read it out. Maybe to kick things off, if I could ask the panel if they wouldn't mind just unpacking the specifics of a sale and leaseback transaction. What exactly does it mean, and what does it entail for Grit and for Orbit? I'm not sure, Mr. Chandaria, if you would like to kick off, and maybe some of the members of Grit could add to that.
Sure, thank you. So basically, the sale and leaseback transaction is essentially a sale of the property to Grit, and then releasing it back from Grit for an extended lease period. And the sale portion of the transaction allows us to essentially generate proceeds from an asset that we weren't able to. It was not a deal structure that worked to sell the property and to stay as a tenant in the traditional sense in East Africa. So in this particular deal, what the structure allows us to do is to sell the property to Grit, but also enter into a lease with them for 25 years, which gives us the security of tenure in the facility. But at the same time, the proceeds really go to unlocking value, but at the same time allowing us to strengthen the balance sheet and grow the business essentially. So this was for me, it was a very unique approach because the structure gives us a lot more flexibility than we would have had with traditional capital raise models that have existed in East Africa. So it really does work for us well.
Thanks. Thank you very much, Mr. Chandaria. Bronwyn, do you have anything to add to that?
Yeah, thanks, Ashen, and thanks, Monet. I think, fundamentally, the sale and leaseback type transactions, and as I've mentioned earlier, and Darren mentioned, so we operate across 8 African countries, and we have successfully closed a number of sale and leaseback transactions. But from a real estate perspective, what is really important is, we want the ability to partner with very strong operators, to be able to release cash onto their balance sheet so that they can successfully grow their operations. And the ability for us to hold the real estate, because that is our game. We manage cradle to grave real estate solutions, which means we do the facilities management, property management, development management, asset management, and it allows the operator to focus on what's core to them, and then Grit focuses on what's core to ourselves. And what we've done historically is we've done a number of our hospitality. So we don't hospitality tenants in the same structure. We don't take operational risk. We are holding the real estate in the lease stream, but obviously we have to partner with strong operators. And, just to give you a little bit more insight is that the significance of the Orbit business, and I've personally walked the facilities and understood sort of the products and what they've got, is a lot of the stuff that they are doing is very, very captive, and they've got market dominance. So the ability to take a local operator and for them to expand that is really, really exciting for us. So Sashin speaks about 2 parts of the transaction. It's the existing real estate, and it's actually a development of a additional real estate facility for them to expand their operations. And that's what we want to do as their real estate partner. And as I said, it's a long-term relationship. So I wasn't being tongue-in-cheek when I said for the next 25 years, we are going to be partners. And that's what it actually means. And that's the strength of the sale and leaseback and the alignment between a very, very strong operator. So that is our excitement about the Orbit business, because not only is it a sort of do what it does from an operational perspective, so key and prime in the market, but it's also local to the Kenyan market. And as real estate players and even the IFC, if we can support more businesses across Africa on these sale and leaseback opportunities, whereby we're strengthening the local operator balance sheet for them to expand their operations and be able to do more of what they do and even better, that is the ultimate partnership that we see. And that is why, again, as Sasha alluded to, we've definitely shown Grit, excuse the pun, through this transaction and definite resilience and perseverance. But that is the importance, because we're in this for the long term. So he has to be comfortable with us, and we have to be comfortable with him and his business. And that is why this transaction has taken, obviously we've had COVID overlay that, but close on 2 years to conclude. And that is the extent of the due diligence that Sachin and Orbit has to do on us and we have to do on him. So that is how this transaction is born and the success we see into the future.
Fantastic. Thank you very much, Bronwyn. I've got Peter Cromberge from Merger Market who asked, good day to the Grit and Opal team. What are the terms of the IFC debt funding package? I'm not sure, Darren or Adam, if you're comfortable in taking that.
I'm happy to start that, Monet, and Adam can add in. I think, so that's the very important part of this transaction. So the IFC, which is International Finance Corporation, a division of the World Bank, has come in and is going to be providing the debt structure into this transaction. I don't think we can underestimate that because that shows a great commitment to the continent by the division of the World Bank. I think what comes over that is also a huge corporate governance stamp, because the process you go through, obviously we as a listed company on the LSE have strong and stringent corporate governance oversight, but with the World Bank coming in and doing a whole bunch of due diligence on the transaction, as well as the structure and stuff, I think it gives you a good sense of how well the whole transaction is put together. And then I think the final point is, we're all committed to strong ESG and sustainability policies, but I think the World Bank brings another layer of stamp of IFC accreditation and green stamp approvals that we have to make sure all of our developments take place. And I think the final point is, I think we quote the number, but it's about 14,000 square meters of additional capacity that we're putting on as part of the phase 2. And I think it's that growth that the IFC is involved in. So what are the terms of the debt? I think the IFC comes in at 5.75% above 6-month LIBOR as the funding cost. It's a $25 million facility. I think it was an 8-year tenor. And obviously, the intention is that these are type of transactions that can then either, once the facility is up and running, can be financed in the normal bank market, or clearly the IFC as a longer term partner could still be there to refinance into the future. But an 8-year tenor, which is almost unheard of in sort of African property financing, which is why the attraction for Grit. And again, at the sort of price points that are relatively normal for property transactions on the continent.
Thanks. Thank you very much, Darren. Any thoughts from your side, Adam?
Well, no, I think it's captured pretty well, but I think the importance from the IFC side is, they needed an impact project to be involved in. The nature of the transaction itself and the value that's being added not only to the existing facility, but the sort of green elements and sustainable elements that are achieved through the redevelopment, I think are what ticks the box for them. So I think Darren captured it very well there. But important from their side was that a sort of approved project and something which they could really put their name to was behind this. And as Darren mentioned, it's really a stamp of approval from their side to say that what we're doing here has genuine impact. It's not something which we can sort of brush over and say is not going to achieve certain sustainability goals. We've aligned with the IFC and the other financing partners as part of this transaction. And I think, between the three of them, their rubber stamp on this really is a vote of confidence for us that we are achieving a genuine impact type of strategy through this transaction.
Thank you very much, Adam. Ladies and gentlemen, please be reminded that you can type your question in the chat function and I'll read it out. Or alternatively, if you raise your virtual hand, we can unmute your mic and you can ask your question in person. We've got a question from Akona Machoba from Moneyweb. Can I please get an update on who the major South African institutional shareholders in Grit are and what percentage do they hold respectively?
Let me start, and I think Bronwyn can complement that. I think it's worth just understanding we did delist from the JSE last year, but a majority of our South African shareholders moved across onto our Mauritian register. So as of today, we have about 38% of our register sits on the UK London register, and then the rest sits on our Mauritian register, which makes up the South African institutional shareholders. The largest shareholder of our group is the PIC, the Public Investment Corporation, which administers funds on behalf of the Government Employee Pension Fund in South Africa. They own around 25% of Grit. And then we have other large institutional pension funds. So the Eskom pension fund, and then there's a few others that are sort of below the 5% threshold. Still material shareholders, but not above the 5% threshold required for disclosure. But for, to describe it best, it's sort of long-term pension fund type investors. And I think a point to highlight is that although GRIT looks and feels like a REIT, a real estate investment trust, we're technically not a REIT, but a number of our investors are investing in us because they're looking for that long duration income, very similar to what a REIT would provide. And that's your traditional long duration pension funds. So we've got a number of those in South Africa. We get great support from our African pension funds, from Botswana through to Mauritius, Seychelles, and Ghana. And then obviously we get strong support from a shareholder perspective in London, from some of the large institutional shareholders here.
Thanks. Thank you very much, Darren. Bronwyn, would you like to add anything?
Yeah, so I think just to complement what Darren has said, so just a reminder, as Darren mentioned, we listed in London in July 2018, and what the idea was to be a conduit for developed market money to find an investment platform into Africa, which was highly governed. And we have been successful with stepping up to the premium segment in London. So we sit on the highest governance structure in the UK. So what it allows is that it allows GRIT to be that conduit, that bridge into the African continent. So whilst and the investment strategy is to deliver long-term sustainable growth, and a transaction like Orbit marries into that because of the long-term lease profile, the cash flow profile behind that, which allows us to deliver that long-term sustainable dividend and total return growth. 40% of our, just over 40% of our share register does sit in the UK. M&G is a major anchor of that. So, whilst the African continent is an emerging market and continues to be challenging, GRIT has created a very good governed platform for the likes of the IFC, even for the likes of the operators like Orbit to be able to work with, because they have that stamp of approval that we have gone through the highest authority to be able to get onto the LSE, which allows us to be a very strong governed partner going forward, which means we have to deliver what we say we're going to deliver. And I think that's really important because unfortunately emerging markets have had transactions that have stopped or not been successful because of governance challenges. And that is really the conduit and the story and the bridge that the GRIT, the business brings to a number of key stakeholders, both developed market money and also the continent itself.
Thanks. Thank you very much, Bronwyn. There aren't any further questions from the panel. Oh, sorry, from the floor. Ladies and gentlemen, before we close, if you do have a question, please type it in the chat function or raise your virtual hand, and we'll get to it. But with no further ado, Mr. Tsandaria, would you like? I beg your pardon. There's a question from Jenny Louise B, who asking on behalf of the Kenya media, will it be possible to outline the expansion plans for the Chandaria Industries that the plant expansions will facilitate?
Sure. It's so the name first is Orbit Products Africa Limited, not Chandaria Industries. That's another business. But yeah, the expansion plan, the new facility essentially gives us a lot of storage. So about 70% of the facility is for raw pack and finished goods storage, and about 30% is for expanding manufacturing footprint. Along with that, we're also getting some better utilization of our current administrative office space and manning up a little in the admin department. So overall, it's a little bit of office space, a little bit of manufacturing space, and then a substantial uplift in the storage footprint. And that will allow us to plan our supply chains better for our customers and ourselves. So we become a lot more efficient on execution of our orders, but also have the room to grow. So as customers grow, as our volumes grow, we do need that space to be able to hold the raw pack and the finished goods for customers.
Thanks. Thank you very much, Mr. Chanjaria. Then Peter Kronberg is asking, Bronwyn has pointed to the possibility of further transactions of this nature in the future. Can the grid team take a bit more, can the grid team talk a bit more to their future pipeline and whether they will try to replicate the structure? He says that many JSE listed property companies are trading at a significant discount to their net asset value. Is there any capacity for grid to use its equity to fund these sort of deals?
Yeah, thanks, Monet. What I will do is I'll start on a question and I'll let Darren also be able to give his input on that. So, and hi, Peter, it's good to see you. Actually, we haven't chatted for some time, so I hope you're well. And I always know Peter always asks me about future pipeline, and I think I always say, you know, as a listed company, we need to be careful what we say generally. But I think, you know, we've been very clear, Peter, to in the market and in a lot of our press releases, even pre-COVID, to really say that there's going to be a focus on a couple of asset classes for the business. Industrial, sale and leaseback type opportunities. We've included corporate accommodation around embassies. We've included offices. And we've also stated our significant sort of focus on reducing our retail exposure. We also have opportunities through our development partner gateway on the data centers, also very similar type structures. So whilst we haven't formally announced a pipeline, there is a huge amount of opportunity around types of transactions that we've seen with regards to the Orbit transaction that we've seen itself. And as you correctly have highlighted, Peter, we are trading at a significant discount to NAV. So the challenge is that it becomes very difficult to use traditional equity markets. So, you know, it becomes a combination of being able to look at opportunities, being the ability, we announced the launching of a preference note through project finance type structure to fund this particular project, which is a different structure to what we would have done traditionally through the equity markets. But it also is great funding because it's long-term funding for Africa. And we're able to bring on that funding, and with the sort of opportunity that we see under Orbit, we're able to match that funding to a very accretive transaction that we've done. So whilst we aren't able to access traditional sort of equity markets because of the discount to NAV, what we are seeing is we're seeing a huge amount of interest from the DFIs around specific asset classes that Grit has a strategy to focus on into the future. And it's aligning what the DFIs want from a long-term basis and what Grit wants from an investor perspective and our total return, to see if we are able to create substructures under Grit to be able to fund these type of transactions. So yes, it becomes challenging, obviously with the discount to NAV, but there is still opportunity to be able to look at other structures to fund these. So I think in summary, Peter, is that a key focus is going to be those specific asset classes and a reduction of our retail. We are making a market announcement, which I think has gone out to market, so I need to be very careful. That's what Darren is here for, around the reduction of the retail sector in Grit. But we see focus on Orbit type transactions going into the future. So Darren, I see that you are muted. I don't know if there's anything else you would like to add on that for Peter.
Yeah, so I think just absolutely key, Peter, is that with companies trading at a discount to NAV, you have to find other ways to fund the equity, which I think is why we're so proud of this announcement today. We found a way to issue perpetual instruments, which qualify as equity. It's fairly common in Europe. In France, they issue a bunch of these preference notes, which qualify as equity. Therefore, you fund the equity as part of the transaction without raising dilutive ordinary equity. Obviously, it's not the preferred route, but obviously when we're trading at a discount to NAV, it's the only way you can continue to grow responsibly. I think what's interesting is today we have announced, and we are seeing a number of REITs globally are embarking on asset recycling strategies. So, you know, the Grit Group has mentioned that it's going to be targeting an asset recycling strategy. And obviously, if you're monetizing assets on one side, you're able to redeploy those funds into other accretive assets. And I think, as Bronwyn alluded to, there's certain sectors and geographies where we're trying to reduce our exposure. And the idea is to raise the funding to then redeploy into exciting opportunities like the Orbit acquisition, because There's certain sectors in Africa which are structural growth sectors. And we believe industrial and supply chain and FMCG goods are structural growth sectors, as well as stuff like data centers and corporate accommodation for embassies. So, there's certain sectors that Grit will focus on, and we believe we can recycle capital effectively to replicate further of these transactions. The further transactions will be complemented by DFIs, but it's a holistic solution, very similar to how we've come up with a holistic solution on the Orbit transaction.
Thank you very much, Darren. There aren't any further questions from the floor. Bronwyn, I would like to hand back to you and to the rest of the Grit team for concluding remarks before we hand over to Mr. Chandaria for his final thoughts. Over to you, Bronwyn.
Thanks, Bune. I think just from our side, again, I just want to echo, I know it's been said a number of times, but our business at Grit has been built on relationships. And, a lot of other people, as Darren mentioned, we are the only real estate Africa play that's listed in London, and really does what we do across the African continent. And it's really been, the foundational part has been relationships with shareholders, relationships with financiers, relationships with tenants, key stakeholders. And this transaction really ticks all of those boxes for us. So just on behalf of myself, and the team, I really would like to thank the IFC, Blue Peak, Ethos, the Orbit team, the Orbit family now to become the operational transactional team at Grit. There are many people that would have walked away in both directions during the last 2 years. So I think from our side, this is a great opportunity, and we look forward to leveraging off this and the uniqueness of what we've done. I think what Darren has correctly said, having the IFC sort of launch their first transaction with Grit, having a preference note structure is also a first, probably a first for a number of sort of real estate companies on this side of the equator. So we're setting many firsts again, as we do at Grit. And we're looking forward to really working together, Session. So thank you to you and your team as well. And to our team, Adam and Darren, thank you. Let's onwards and upwards now.
And maybe just one final thank you to add is our transaction advisor platform 3, who've done a wonderful job, as Bronwyn said, for 2 years running of sort of being a part of the team as well. So that's all from me. Thanks, Monet.
Thank you, Adam. Any closing thoughts from your side?
Monet, just to say, I think very exciting for the local Kenyan market, and I think Sashin touched on it. What we're excited about is what sort of opportunities can come from this. We certainly believe there's similar type transactions to be done in the market, and it takes the sort of know-how and the work to unlock the value that is underlying in a lot of businesses. And I think we look forward to engaging with those people. I think we're certainly well placed. We certainly have paid the school fees through between ourselves and Sash in unlocking this one. But we look forward to unlocking further transactions and creating value for businesses on the ground. For us, that's a massive focus going forward. It's not just the multinational focus, as Bronwyn said. We're very interested in partnering with strong local regional operators who have the sort of targets to expand across their respective regions, and this is a good case study for that. So thanks again to Vishal and Sashin and to Paul as well from Catalyst for all the hard work.
Many thanks. Vishal, any closing thoughts from your side?
Yeah, sure. Thank you. And look, I want to thank everybody, as I mentioned earlier. It's amazing to see how, from a boardroom session, Sachin and I and the broader Opal team had of trying to unlock value of our balance sheet to actually now see this to fruition. It's a wonderful story. And it's wonderful to see how we're going to be one of the first to bring this level of innovation to our markets, which is, as was mentioned earlier, trying to develop market structures into our region and really unlocking the value of the growth that our region can actually see. It's wonderful to be part of that story. So I look forward to the conclusion, and then thank you everyone for being part of our story.
Thank you very much. And Mr. Chandaria, over to you for the closing thoughts.
Thank you, Monet. Yeah, I mean, I'm not sure what more I can add on the panel's comments, other than, again, re-echo and just restate that the thanks are very, very much due, and appreciating all the work and effort. And it would be unfair of me to not also recognize my wife, who's on the call as well, and thank her for her patience and perseverance over the last 2 years and putting up with some very tough months in between there. But yeah, absolutely. I mean, I think the only comment I can make is that this deal allows us to get to a point where we're essentially focusing on growing and bringing manufacturing back to Kenya, employing people and deploying our capital and capacity in the right way to bring manufacturing and grow manufacturing in Kenya, which is one of the 4 pillars of our president, Uhuru Kenyatta here. So we're working hard, and we'll continue working hard with our new partners. So thank you very much.
Mr. Sonjaria, and to the members of GRIT, thank you so much for your time and your input today. Ladies and gentlemen, this then concludes our conference for the day. We thank you very much for your interest, and we wish you have a great day further. Thank you.